right, about 3 minutes. Happy President's Day. All right, about 3 minutes. Happy President's Day. All right, about 3 minutes. Happy President's Day. All right, about 3 minutes. Happy President's Day. good morning. Happy President's Day. All the markets are closed in the United States of America. I believe the banks are closed, bond markets are closed, commodities are closed. Yeah, but here we are. So how you doing? How do you feel about that? Well, you know, obviously it's a risk. So, hey, you know what? I'm at home anyways. I've been up for hours, so I might as well do an update, right? Let's do a market update. But you should probably know that trading today is a terrible idea in general. But there's lots that we can do. Now, TRADARS.com, radars for traders, fully automates our technical and fundamental analysis. We also do market sentiment. We do coaching courses and community. Pretty cool. Traders Way provides execution. They're an ECN. I've been working with Traders Way over 10 years now. They're good people. It's a good business model. They're a good service provider. So now I consider this strategy, tactics, and coaching and execution. So that's what you need to succeed. With that being said, There we go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. All right, so let's do a quickie. I'm having trouble loading the fundamentals today. I don't know if Google Cloud is slow or if I probably need to reboot. I notice all my browsers say that there's updates available. Oh my God, just constant. So it's not quite working all right. Maybe we can get through this. You know, this is what we get for showing up on a holiday, right? Yeah. I notice it's still trying to load. So it seems to be a Google Cloud thing, but it might just be me trying to access it with probably an update that's waiting to download, or it's already downloaded and it's waiting to install. So anyways, whatever. What we can see is gold, silver. Gold and silver are still our best opportunities. In fact, when you look at gold, its macro score is 10, its seasonality is 2, and its current technical trend is 2. I mean, it should be, and it has been, and it is. On the other side, the ends are still got quite a bit of negative scores. Seasonally, they're a little bit negative, and in particular, USD-Yen and Swiss-Yen, which are interesting because these are not ones I trade that much. Guess what? They're very bearish technically, or I should say statistically. And then we get some weakness macro-wise in the euro. So euro, Aussie, euro, pound are statistically bearish and kind of seasonally bearish. So it's sort of like a could-be situation. Let's see if we can get this to load. Come on, Bubba. I hope we don't yeah, I think it's me. I don't think it's them. I think it's me. Well, let's start with the daily evaluation. Since Friday, volatility is up a little bit. That's a 0. Yen is slightly strong. That's a 0. Gold is slightly bullish. That's a 0. Dollar is slightly bullish. 0. S&P 500 is slightly down. That's a 0. 2-year treasuries have come down. 10-year treasuries have come down as far as yields, and that's good. And the put-call ratio favors calls, which is good. Okay, so obviously we need to take a deeper dive let's do that on the weekly evaluation. Volatility is down a little bit, not a big deal. Yen is slightly strong, that's bearish. Gold is flat, that's a 0. Dollar is weak, well, that's good. S&P 500, it's up a little bit, that's a 0. Treasuries are down 0.7% on the short term, that's good. Treasuries are down 0.5% or almost 0.5%. It's a 0, but that's 2 shakes of a lamb's tail from a 1. So you could say, well, I'm going to give that a 3. Well, that's you. Okay, and then the put-call ratio does favor bulls. There are more calls than puts. People are positioning themselves to make money if stocks go up. So we score that as a 2. You could do maybe a 3. And then now on the long term, this was a 4, then it was a 2, and now it's a 1. So we've gone neutral. So the market is stalled out. Okay, the market is stalled out, but what we're looking at today is, it's a slightly bullish. The best thing right now, I would say, is the yields, right? The yields market. People are funding treasuries, which is nice. Necessary, we'll say. Loading. Yeah, definitely me. Well, that's why we have coffee. So like I said, banks are closed today. Markets are closed, right? The stock market's closed. There's not a 9:30 ding, 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 ding. Bond markets are closed. Commodity markets are closed. Yeah, for this calendar to not load, it's me. What am I going to do? Update my browser? Yeah, I think it'll kill YouTube though, won't it? Yeah. I checked this side though. This is loading pretty good. The technical stuff is loading pretty good. So that's why I think this is Google as well. So I think it's a combination of me and the Google Cloud. Otherwise, then why is this loading faster? Yeah. Oh, you guys say, yeah, so, okay, you're saying it is just me, huh? Well, the internet speed is fast, so what am I, it's a browser. I have to update my browser. I don't want to do that. I don't want to update my browser. I don't want to. Really, the calendar you should know. Yeah, well, I don't. Yeah, thank you, Denise. Yeah. It'll shut down everything. I don't want to do that. Or maybe I can, maybe I will. I think it'll be over here. All right, I think I'll lose the, let's see. I think I'll lose hang on. Anyways, all right. So, yeah, I think what'll happen is it's going to shut down all my Chrome browsers. and I'm running I see the YouTube chat in a Chrome browser, so I'll have to bring that back up. Let me just grab the URL. But the streaming software should be independent of that, so I don't think I'll lose you. So let me update this, and so I'll just be blind for a little bit. Hang on. New update, relaunch. All right, well, that wasn't too bad. Let's see if it helps. I really wanted to do the fundamentals. Otherwise, I'd say, let's just do the technicals. But actually, I'd like to see the commitment of traders report. Huh. Well, hell's bells. This is what we get for waking up at 4 o'clock in the morning on a holiday. All right, well, then let's see what we can do. Let's go to the technical side. In fact, let's go to scalping because we left off on the calendar. This will answer if there's any interesting things on the calendar this week that we should be focused on. RBA decision tonight. Okay, is that tradable? Yes, it provides volatility and it provides a reliable, repeatable pattern. Tomorrow, UK jobs report. Yes, important. German zoo. Yes, important. Canadian CPI, tomorrow morning, yes. Balance of trade out of Japan, tomorrow night, yes, important. UK CPI on Wednesday, yes, important. Japanese inflation, yes, important. This is a busy week. And then retail sales in the UK, busy, 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 busy. There's lots of earnings in the United States too. I think Thursday is a big day in earnings. Everything else is next week, so that's pretty big, but notice none of these are USD related. Of course, we have our weekly claims and stuff like that, but those are the events that have reliable, repeatable patterns. So there's other stuff going on, obviously. Okay. Auctions. Okay. This is the stuff that moves the treasury market, all these auctions. So when it comes to Australia, not only is it jobs, it's wages that you want to pay attention to, right? So nice improvement, but check it out. This should be like 1.5 to 2, and we're at 4. So yeah, it's going in the right direction, but 3.5 is still redonkulous. Okay, so look for that because that's where inflation lives. That's where it's born. That's inflation's mama. New Zealand. Kiwi will be on the move. There's your Aussie jobs. Yeah, Canadian housing. You know, this obviously is important. Philly Fed is important. The reason it doesn't come up on that other calendar is it either doesn't provide volatility or it doesn't provide a reliable, repeatable pattern. Claims are important, especially after recent NFP and CPI type data. Really, PCE down the road is a doozy for us. Oil on Wednesday. Wait, no, or is that pushed? That's pushed. That's Thursday, isn't it? That's pushed to Thursday. Yeah, that's Thursday. Excuse me. There's a rumor on the street, if you're trading oil, that OPEC was set to increase production in April. The little birdie on the street whispering into people's ears is that they're not going to increase output. So a drawdown here, along with that rumor, could produce some bids on oil. So maybe we can take a look at that a little bit. See, there's stuff going on. Okay, there's your Canadian retail sales. So here, existing home sales is a big deal because we want to see, are people buying old homes, pre-owned homes, certified pre-owned homes with 6.5%, 7% mortgages. Okay, now if you're not sure what the 30-year mortgage is in the United States, you can just pull it up at the Fed, and particularly at the FRED, the Federal Reserve Economic Database at the St. Louis Fed. My favorite Fed! So anyways, high interest rates may sort of kill this, right? And, oh. Yeah. Oh. Okay. Was 7, now is 4, you know? And think of it too, this is really important to the economy. And this is one way that interest rates really have a very quick impact. Most interest rate changes take years, right? Long and lagging effects. As what's his name? What's his name says? Milton Friedman. All right, so interest rates come down a little bit, and now you can afford a house. In particular, if you think interest rates could continue to come down. I don't know. But let's say suddenly a mortgage is cheap enough that you can afford to buy an existing house. So first of all, you get this recorded as an existing home sale. Why? Because you can get an affordable mortgage. If you can't get an affordable mortgage, then you don't buy a house. But what happens when you buy a house? Well, a bunch of different agencies make a boatload of money on your transaction. Like, does anyone like paying, like, what was it, $5,000 for a title, for title insurance? You're like, why don't you just tokenize the damn thing and put it on the block? Put it on the blockchain, man. And I'll pay $2 instead of $5,000. How about that? But whatever. So, you know, and the mortgage broker and everybody makes a little bit of money off of you. Okay, great. The lawyer makes money off of you. Now your lawyer can pay their Mercedes lease. Okay? Then what? Then you go to the Home Depot and the Lowe's. Where are they located? Right next to the Walmart, where you got the diabetes. Yeah, cool. And then what? So you go to the big box store and you buy paint, you buy carpet, you buy new countertops, and then you hire someone to fix the heating and air conditioning and tune that up, and maybe you hire someone to put on a new roof and gutters. Maybe you hire someone to put in new windows and doors. Oh my God, it's got all the brass hardware. You got to take all that off and put on the oiled bronze hardware until suddenly nobody does oiled bronze hardware anymore. And then you got to put on the fake gold. And you're like, well, isn't that just like the copper stuff? The brass that we took off? No, it's not brass. It's fake gold. It's brushed gold. And, anyways, I'm babbling, but the thing is, you end up spending a lot of money. And that money, remember, your spending is somebody else's income. Okay? In economics, savings is equal to investing. Which is an interesting thing is, if you don't save it, someone else, if you save it all, then you get a return on investment, right? Because you put it into a bank and they pay you an interest rate. Or you put it in the money market and they pay you an interest rate, so on and so forth. You buy some stocks and the value of the stock goes up or down. So you can, right? But you shift savings into investment, but your spending can also equal income. Because you go to Applebee's and everybody at Applebee's makes money because you bought dinner. The servers, the kitchen staff, they make money, but so does the owner of the restaurant, so does the owner of the building, so does the insurance company, so do the delivery drivers that deliver the raw food. All of that is because you ate there. So your spending was everybody else's income, but then, of course, some other company buys stuff from your company, and now you have a job, right? So all that goes away if people can't afford a house. Isn't that interesting? So you want interest rates to be low. Cool beans, right? Cool beans. So, is it important? Yes. Existing home sales is important. The other thing we know is it's volatile. The other thing we know, there's no reliable, repeatable pattern for trading it. Isn't that what the most important thing is? We know it'll do something, but we just don't know what it'll do if it's higher than this or lower than that. We just don't know. There isn't reliable data. So this it goes from an opportunity to a threat. You need to understand why it's important, because it is important. But it may not offer a trading opportunity. Isn't that cool? Then we get to like this stuff, like consumer sentiment, consumer expectations, and all that kind of stuff. I don't like this stuff. I don't like it. How do you feel? I don't care how you feel. Well, I care how you feel. I don't care how, the esoteric idea of how the consumer feels. This can be influenced in so many ways. When you do a survey, how you ask the questions can determine the outcome. What matters is, are people buying existing homes or not? And how they feel about affordability. How do they feel about the price? How do they feel about mortgages? Is a lot different than, well, you might hate it, but do you do it anyways? Okay. Is it Friday already? Are we on Friday? Yeah, it is Friday. See, I knew that because of the rig count. So rig counts come out on Friday. Okay. The higher number of rigs, the more oil. Okay. So we can see a slight increase in the rig count, and so we'll get an update. And then, of course, Friday, we have all the CFTC report. Cool. So let me take this back to the top. Just a little hack. You can just say, come it won't let me do daily? How come it won't let me do daily? It's weird. It was daily. How come it won't let me do daily? I must be doing it wrong. One of those days. But I didn't need an AK, so it was a pretty good day. All right, so that's that. I don't really want to do technicals, obviously, because it's not a great trading day. Now, if you were going to trade Forex today, excuse me, man. All right, let's see if I can get my voice. Me. Maybe I need some NAS as well as coffee. Yeah. and now we got hiccups and burps and everything. Wow. Everything today. So you may want to, if you were going to trade Forex, you might want to do like something sort of generalized, like maybe just yens. Okay. Just yens. If you are like commodities, for example, these aren't really they're not trading today. Now, if you were going to do oil, you could trade Brent, just not over U.S. exchanges. Okay, stock indices, non-U.S. are moving, but U.S. ones should not move. These stocks, they're not trading today. Sorry. There you go. I've also been sick. I think I've been sick over the last week. Yeah, but nobody cares. So you could do crypto trades all the time, right? Peer-to-peer crypto, peer-to-peer Forex, sorta. But don't do dollar pairs, right? And maybe if you're looking for something to do, which I think is different. Marines don't get sick. Yeah. I was watching a documentary, Jim, about the young Marines that cleared out Fallujah. Gee whiz, these kids were like 18 and 19. Just amazing. So young. Yeah, just so young, that straight out of high school. Holy smokes. All right, let's tempt our fate. Let's see if we can load this fundamentals. Come on, Google. It's obviously the Google Cloud. Come on, Google. With me, I suppose part of the problem. I don't know. If it ain't my browser, what is it? So this part of the site is sitting on Data Studio, which is a Google Analytics product. Not that Google Analytics. It's an data visualization tool run by Google on their cloud. And then we have millions of tables that Data Studio pulls from, the data set that we get from data providers. So we have multiple data providers. Some of it is things like the candlestick data, which is completely different from the fundamental data, which we might get from the OECD, we might get from the Fed, we might get from the World Bank, we might get, and so we have all these APIs and all these data tables and all that kind of stuff, and it all sits behind this Data Studio at Google, And then Google, you can program it to then take that data and then not interpret it, but just visualize it, right? So we have pretty colors and little gauges. But that's the part that's not loading. And of course, part of that is the Commitment to Traders report. Come on, Bubba. So I'll show you this. cftc.gov. All right, so we will do the Commitment to Traders report. And this is the page. This is where we get the data from. And you go to Financials and Futures Only. You don't want options and all that. And this is the data. Yeah, that's what it looks like. Now, this is why we are like, hey, wouldn't it be cool if we had pretty colors and charts, bar charts and tables that you can manipulate and organize? Wouldn't it be better than this? Yeah, but this is what we get. And I've been downloading this for 20-something years. So, Canadian dollar. Let me give you the, if you want to download it, here it is. Now you have it. So go ahead and analyze it. And you're like, Wayne, it'll take me like hours to go through this and contemplate what it means and what is good, what is bad, what has changed, what hasn't changed, how much has changed, how little has it changed week over week. Yeah, I used to spend hours doing this. Because of traders.com, usually now it takes, well, it's done instantly for you. If we can get this sucker to load. Let me try to get to it. Oh, okay. Let's try to let that load. So it's loading this. How pretty, right? All right, Canadian dollar. You have dealers. You have wealth managers. You have hedge funds. Okay, cool. You have others. Okay, but they're reportables. What is the other? I don't know what the other is. All we know is they trade so much that they're required by the government to report, but they're not hedge funds. They're not asset managers. Maybe there's some sort of corporate or not corporate, but typically in there you have hedgers. Okay, so maybe that's what they're calling, right? So these are your bona fide hedgers. So, by the way, I like to use the legacy report. This is the newer report. There was a change, I don't know, 4 or 5 years ago, recategorizing this. So it used to be basically institutional and then hedgers. And then others were non-reportable. So now they've broken it down in different ways. And some people might say, well, I only want to track hedge funds. And others are like, I only want to trade these guys. Okay, whatever you want. Non-reportable is us. Because what they can do is they add up all the dealer positions, all the asset manager positions, all the hedge fund positions, all the other reportable positions, because all of that has to go through the exchange or be reported. Okay? Yeah, or be reported. So that doesn't account for everything that they see. It doesn't account for total volume. So they just put that non-reportable, and then what that means is, well, they're not trading institutional size positions. It's retail. It's us. And then when you account for that, then now you have total volume, right? So what you want to look at is, let's say you want to track hedge funds because they're speculative, right? So then the other thing is how many contracts long, how many contracts short, okay? And then you want to check the changes. This is fun, right? The changes. And then what was the change long? and what was the change short. So you can see hedge funds for the Canadian dollar dropped 9,000 short, removed, so took profit on 9,000 short contracts. But they're still very, very, very short. They're just, right? So now you can do things like calculate the percentage change, because you're like, well, here's the current total longs, here's the current total shorts, here's the change in the longs, here's the change in the shorts. So now you can do all the calculations, right? How easy is that? Well, but you'd have to like now put this into a spreadsheet and then have those pre-calculated. Or you could just use our tool because, well, we've already done this for you. So we have to do the math. Oh, I shouldn't have organized it. Well, we'll leave it at that. Okay? So this is the total positioning that you see in these numbers. So, right, hedge funds for the Canadian dollar are still vastly short. But what's the percentage of short versus long? Well, you'd have to calculate that. We already do that for you. So anyway, so you have all of that. That's what this is. And then you rinse and repeat for Swiss franc. Rinse and repeat for British pound. Isn't this cool? Hedge funds, 58,540 contracts long. Okay, so you can see, but what are we going to do? We're going to say twice as many long contracts than short. So yeah, they're positioned bullishly. Okay. Now, week over week, there were some buying. But what is this? This is selling of bearish positions. So the relative change is quite bullish because we lost bears. Very few people bought more. We just have significantly less people selling. So it goes up. So it's generally bullish and it's relatively less bearish, which should have a positive outcome. Okay? So you can try to do all those calculations manually, or we just have it here. More bulls, less bears, it went up. It's 2.86% more bullish. Okay? Sure, Richard, it's all there. Okay, you can use whatever you want. But all I'm saying is I really, 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 really appreciate having this data visualized. So we can see the open interest and the change week over week. Oh, so I'm showing you hedge funds, not asset managers. Okay. And oops, I don't want to click this, so that's not loading properly. So yeah, this is definitely a Google problem. But anyways, they typically fix themselves pretty quickly. What we can see is price on, I don't even know what asset this is. I imagine it's euro dollar. I don't want to click that and then have the whole page reload. So I don't even know if that's a real asset that we're looking at. But if it was euro dollar, okay, euro would be green. See, asset number one, euro would be green. And you can see the week over week, nothing has really changed that much. And is bearish. And then if we were looking at euro dollar, dollar's the second asset. And then it would show you traders are actually long the dollar. And not a lot has changed month over month, but it's definitely long and short. Now, is that actually euro dollar? No, I'm not sure what that is. So I don't want to click too many things. But I just wanted to show you, like, I used to do this. You download it in the spreadsheet. And you just sit and you take notes. With a pen and paper, you sit down and you take notes, and it takes you hours. I don't know if you spend hours doing analysis. I don't know. But this would be a weekly chore. It wasn't fun. It was a chore, but you would do it. And you would create stuff like this. And then this took a lot of time. Okay? Then a service came out, and it was $300 a month, and they gave me this. This right here. Just this little thing that we're looking at. The longs versus shorts. The change in the dollar, the change in the euro. And I'd look at this dot moving there. Okay, a little less. It became a little more bearish. Euro became a little more bearish. Dollar became a little more bullish. Okay? That was $300 a month. Just this, what we're looking at here. The week-to-week data. $300 a month. And it saved me so much time. So what I used to take hours and hours and hours and hours to do, and it was tedious work, suddenly I can knock this out in a half an hour, and it was easy. Maybe even 20 minutes. Was that worth $300? My time was well worth more than that. So traders.com, the complete cost is $300 a month for everything. Like, Jiminy Cricket! TRADARS is stupid affordable for what it offers. Yeah, if you value your time. Yeah, so anyways, wowzer, that was so important. Very cool. So anyways, you can do it yourself if you want. Here's Aussie dollar. Aussie. Traded on the Merc. Okay. So if you prefer, so you can do your analysis and say, well, I want to do asset managers. Yeah. See, hedge funds are shorter term. They're all alpha driven. They want to make money. They're not hedging. They're not being safe. They're trying to make money now. And so, and I say 11,000 contracts, right? But it's 11,000 times 100,000. So anyways, yeah. Mexican peso, we got it all. Brazilian real, I like to say hey, hi. Why? Because I can. New Zealand dollar, South African rand. Okay, then it goes into the Dow, goes into S&P 500 E-minis. It's really nice data, isn't it? It's wonderful. Go ahead, download and play with it, huh? Yeah. So we'll zip over to Trader's Way. Okay, are you risk on or risk off? Are you buying yen? Well, like on a day like this, I would lean more on the yen than I would on the dollar. Typically, yen will move better during Asian session, in particular against Aussie. So if you had one up here, then you had your London Open up, and now maybe. Okay, remember the markets are closed. Okay. Are you going to play it like a Head and Shoulders? Yeah, well, that's the idea. If Aussie's going to cut, does that bring weakness? Yeah, well, that wouldn't be the dumbest thought in the world, right, Glenn? Like, we don't know the future, but well, that kind of makes sense. So if you were going to trade that narrative anyways, you would fit that into your narrative. All right. So, like, what do I got going on here? Well, it looks like we're still in business, right? Does that look like a dumb trade? Not yet. Okay. I've done dumber trades than that. Here's that Kiwi. Kiwi's higher than I would like, but it's still in a sell zone. So I identified this. Used to be support, now resistance. And I have a projection of taking this down on the retest. So let's just move it. Okay. And I'll adjust it since we have new data. So there you go. Is that going to happen? I don't know, because you might say, well, look at the 5A cross up. Yeah, well, that doesn't make me a bull. Fundamentals make me a bear. Currently. Maybe. I don't know. I'm open-minded. So, is this a place in which I could sell? Well, we've already identified that as a sell zone. Have we respected that? Well, let's go from a daily to an hourly. Have we respected our line in the sand, which is the top pink? Yes, 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 yes. So can we take it down? Yeah, well, the first drop is here, and then the second one would be a retest of the central, and then take it down. Is it plausible? Yeah. Okay? Yeah. Yeah. Would interest rate cuts in Australia, New Zealand, would that bring some weakness? Yeah, probably. I don't know. What do you think? Okay, I have this as, remember the fill the gap trade. I'm going to drag it over. Okay. Now, the interesting thing about this trade is we've already done it. So I would start leaning on March. What's the target for March? Wait, you don't have a target for March? March's target currently is 153, 152. We're at 159. And if you're wondering what I'm talking about, you're like, what are you talking about, Willis? Oh, yeah, well, I'm doing this to this. So it's going to drop 500 pips? Well, maybe 600 pips. So I'm already trading March. Okay? Did you click the thumbs up button for that? That was good. That was worth the price of admission right there. Sir, yes, sir. May I have another, sir? Okay. Oops. Let me get rid of this. Yeah. I don't know, but I've been told selling dollar, buying gold. Yeah. All right, so that's the euro. And this is a 4-hour chart. Remember, I have a 3-year plan on this sucker. This is also done. Okay, this is done, meaning we hit the conservative target. That's the whole zone. There's 2 prices, conservative and aggressive. We hit the conservative. We bounce back. The theory is if you do this early and you get an early bounce back, it goes back to the central pivot. Well, it got pretty gosh darn close. We can call that pretty accurate. And then what? Now it's dead to me. So if I would assume, being a macro trend trader, that, well, the macro trend would continue. It's the only way I can survive. I can't keep changing my mind. So based on what I see now, if I think what has been will continue, and looking at seasonality can help with that. But really, I'm just relying on what has been happening, maybe continues happening. So here's my March number. Okay. And if that holds, and that is our current high, and yen continues to get strong, my target would be, well, let me delete that out. Okay. If this is our top, the conservative target's going to be this, which is basically a bottom. But as that occurs, this will drop. So maybe it's more like this zone down here. Okay? So what happens is we end up going back to my previous target of 184. And we're at 191. Again, if you get it right, another 500-600 pips. But if you prefer scalping 3 pips at a time, you do you. Are you guys happy I'm doing a holiday live stream? Could have been a day I slept in. Yeah, look, I'm all cash. Look at me, all cash. Casual, look at that. Yeah. So I only spent 45 minutes on my hair this morning. Just kind of crawled out of bed. Yeah. And then meditated, drank 2 energy drinks, made a pot of coffee, emptied it. Wait, 2 energy drinks? 2 energy drinks and a pot of coffee. Holiday! Celebrate! Yeah, my throat just gone. Yeah. Yeah, ay, papi chulo. Yeah. Pretty boy. Pretty boy. All right, cool. So anyways, I'm glad that you're hanging with me. Because, you know, even though it's a holiday, I want to do this stuff. Not nada. All right. So these markets are closed in the United States. But, you know, we're bullish on gold. We're bullish on silver. I just want to show you that's all clearly defined. You know, this has been our target since here or here. Yeah. 3,100. So that'll probably continue. Oil, like I said, be careful. There might be a gap because over the weekend, as I said, there's rumors of Saudi Arabia not increasing supply at the April meeting, as was assumed at some point. So there's these cuts, and the cuts have been extended, and they were going to be, and that those extensions would have ended in April, but they're going to re-extend is the idea. So, so that could mean in the future, if we do get global growth, prices would stabilize. But right now we're targeting 67 is the number that I've been saying for a while. Let's go out to a weekly so you can see it. Okay, you see this? So this is our current number. Now let me go back into daily. Sorry for the clearing of the throat. It's constant. There's our 67. I love it. I love it. 68.8 to be more precise. Just need a 5/8 cross up maybe. Or it just continues lower and lower and lower and lower, and we're on our way to below 60. It's one or the other. So we'll have to decide along the way. But like I said, if we're not going to increase supply, then there's less chance of a lower price. Was it 55? Let me give you a more precise number. Where did we start? It's 57.6. Wait. Yeah, 57 point. Well, I can't quite get it. I believe it's 57.6. Yeah, Richard, Jim answered it best. I did a 16-hour course on oil. So how many hours did it take me to design a 16-hour course? 100 hours? And what times the value of my hour, so whatever you value my time at, times 100 hours, but I also paid a PhD to help me with the data visualization and stuff. So he worked, well, if it took me 100 hours to design it, I bet you he spent 40 hours actually building the slide deck and animating everything. So let's say it cost me a minimum cost of $10,000 plus $100,000 of my time to answer your simple question, is how does oil work? I'd say take the course. Yeah. Join TRADARS for a month. You can get the cheapest membership and take the course. Yeah. So anyways, I think I'm done. It is a holiday. The markets are not likely to move very well. This is your risk warning. Hopefully Google warms up. Maybe it was a cold day in California. The servers are frozen. But nonetheless, yeah. So be careful today. I'm not going to do an event, my Monday. I'm not going to do it today. No. I don't think there's anything to do it for, Jim, if everything's flat. So let's just cancel that. Do I have to send out an email? But let's just plan on meeting tomorrow morning. We'll do some ass kicking tomorrow. Yeah. So, hey, thank you for being on my team. Thank you for allowing me into your life this morning. Okay. Happy President's Day. Do something interesting with your time. Okay. Maybe reintroduce yourself to your friends and your family. So anyways, peace on earth. May the pips be with you. May your profits be above average. I'll see you in the AM 24. Boom. Cheers.